Guys, welcome back to my next trade recap. We have Monday, 27th of April, so let's get into it. Starting the day off with a gap to the downside, as you can see here. Wait, let me just clear it all up for you. So, this is Dow, this is US 30. We see that price gaps down at the opening. Then we see a nice correction back to the upside. Asia session fails to close the gap fully. We then are retracing back into a 15-minute displacement, which is a 15-minute fair value gap here. You can beautifully see that. And what we can see here, we see that price is closing within. We have an inside bar, inside candle. We have a candle that is closing back above the fair value gap, slightly chop, then price is coming again back to the midpoint, closing within, closing above. This was my entry trigger to go for longs here. As I missed my first setup here, I think it was 8 a.m. from my German time here, so I wasn't really looking at the charts here. I missed the first candle. I see the second candle closure, so I enter here. I put my stop about below the Asia lows here, the first leg of Asia lows, and below the 15-minute fair value gap. And I targeted, I think it was like this, 1 to 3. I targeted the first no, it's actually the second internal high of the New York session from last Friday. So yeah, let's observe how price behaved here. So we see that price is slightly going up, going back down, bouncing back up, and here, this zone right here was really important. As I noticed, we have strong wick rejection here. We have a lot of wicks, prices slowing down. We have no strength in the market to go higher. I'm noticing that, and as I'm noticing it, my position is still running at this point here. My position is still running. I'm like 1 hour in profit. What I'm doing here is I'm simply looking to the downside, and what I see here is we have all of these stacked lows right here, all this liquidity, and this is something that I thought we could sweep before making an aggressive move to the upside, which I have actually planned and which I executed my trade for. So what I do here, I simply wait, and I think I exited on this candle here. So I exited for break even. We have a candle on 14:15, so basically 2 p.m. here. I exited on break even, and what you see then is exactly the play that I would be fearing if I would be in the trade, you know. So you see this candle, it sweeps the Asia lows here, and it sweeps below the fair value gap with this kind of wick. So it would have stopped me out if I didn't close the position, which I fortunately did. Nice management here, but again, I could have done better here. What I'm not doing is I'm not entering off of this candle closure, which would be the perfect fucking play, because my idea was right. We sweep liquidity. We are also bullish because we close above the fair value gap. We are filling it fully, leaving behind a strong wick. We're closing above, and this candle closure would be the perfect long right here if I would have entered here, putting my stop loss below the wick and putting my take profit. As you can see, price went far, like it went far beyond this level, so it would have been a 1 to 4 but actually I could have been just targeting my last target here and just taken the 1 to 3 trade, and it would be beautiful. As you can see, it played out beautifully. Then price reversed. We had a massive liquidity sweep to the downside here, swept all of these lows here, these massive lows here, we swept all of them, and then price bounced back up, and this movement, so actually this recovery here is the trade that I took on US 100. It's still running. I gotta be closing it in an hour or so, because I gotta flatten all my positions before night and before session closure. So yeah, let's go over Nasdaq price action, which was interesting today, to be fair with you. Coming into the session here, I see that we gapped up and we already closed the gap, the opening gap. So as I showed you, US 30, like Dow, is not closing the gap fully, but here we already closing above the gap already in the first hours of the Asia session. So we can see here we make new all-time highs. We also create a significant displacement here. Significant. Why? Because it's a 1 hour chart, so it's automatically more significant. It adds value to the confluence. So what do we see here? We see a nice displacement. Coming into the Asia session, it was 7 a.m. I wasn't at the charts. I see that price is closing below on the 1 hour chart. So this is a perfect IFVG here. This is a nice inversion of the fair value gap. And here we see that price is going back up, retesting the midpoint here and closing below the midpoint. So we do not have a closure below the midpoint, below the fair value gap itself, but on the 1 hour chart, if we create a nice displacement, an inversion fair value gap after we made new all-time highs, it is pretty probable, it's really high probability that we want to sweep some sort of liquidity before going higher, right? This liquidity would be something like this here. So this would be actually the first and the closest point of liquidity, and also aligned with another 1 hour displacement, with another bullish fair value gap. So guys,